Yes, hello, ladies and gentlemen. Welcome to video number 4 on free value effects. This is a continuation for the series Trading in 2026. And before I start, just like to appreciate everyone who's following up with this. And to those who are just clicking in for the first time, the link is in the description, targeting with the combined playlist for the other videos. You can click and just follow the order. And for those continuing, welcome back. This is Simon, and let's get to it. We are going to talk about market narrative. Think of narrative as a story. So the series has been going on, communicating various things, like if I started in 2026, how I read the market, how I explain market structure. And it just makes more sense if this video would be about how to read the market clearly. Now, what is narrative? So narrative is actually sequence, yeah, how I see the market, how the market behaves, and how it is driven. So as far as I've explained in the previous videos, that you have to know higher highs, higher lows, etc., etc. There are things that I look at to to get to my decision, and these are what I call patterns. So several patterns that I see in the chart, and then they will lead me to make certain definitive decisions, if you ask me, because I know that market moves in waves respecting one parameter to another. So this parameter here is the same as pattern. Yeah. So one thing that I look at are swings. So basically, what I'll be introducing today is both my strategy and how I read them. But it will be like a two-part video. This would be like part A. In the following video from this one, I'll explain to you how I actually execute it and show you chart examples and etc. But now I'm trying to build a story with the strategy I use. So I use smart money concepts, of course, and particularly swings and imbalances. So what is a swing? A swing is a three-candle pattern, as you see: first candle, second candle, third candle, marked by the middle candle protruding as seen in the picture. It can be a swing high with a wick above or a swing low with a wick below. Yeah, so how do I differentiate between swing lows and swing highs? The swing low has a protrusion lower. The swing high has a protrusion high. You realize in both of these strategies that I use, they apply three candle patterns. So yeah, I hope you understand this one. So it's technically first candle right there, second candle right here. This is the one that is protruding. This produces a swing low. Then first candle right here, second candle right there. This is the one that is protruding, producing a swing high. Good. Then we have imbalances. So when I use the word imbalance, I actually mean you have times in the market where it surges, like you get an outburst of volatility, and volatility there just means too much price action on one direction. So, or too much strength on one direction. So basically, imbalances are created after such, when price shoots violently on one direction, leaving a huge candle. So like that. See, told you three candle patterns, same thing. So this imbalance here is what we trade. We also call them fair value gaps, meaning that if price usually comes back to this region, we may get another surge of volatility towards the same direction. So in this case, this would be your bearish fair value gap, because price is going down. So you get first candle like that, second candle like this, then you have the third candle, and the gap in between would be your fair value gap. Likewise here, you have your first candles right there, you have your third candle right there, and this gap in between is your fair value gap. Also, this one would be your fair value gap, with this as the first candle and this here as the third candle. So narrative has rules, yeah. So You cannot just build a story without explaining the rules of the story. You have to have the beginning, the middle, and the end. Practically, this is what I do, and I'll show you when I pull up to chart examples, but now I'll just read them through. First of all, higher time frame is key. So higher time frame holds greater strength than lower time frame. 2, we have price moves from one parameter to another. 3, we have parameters can only be used once, and by parameters I mean the swings or the imbalances. And then once they are used, we may almost immediately create a new imbalance after. So when we're using these parameters once, we immediately create a new imbalance. I'll explain this by using the fair value charts. Yeah, so let's pull up to the chart examples. I am going to use, there you go. We just pull up to this. Yes, perfect. This is AUD/USD. This is just a demo account, 50K from Maven. And yeah, so narrative, how do I build it? I focus on high time frame as well. If I was to focus on high time frame in this chart, I would just go to the monthly straight. And what would the monthly tell me? It would tell me a lot of things. It would tell me that from video number 3 that it is trending downwards. So this is the high, this is the low right there. So you get your downtrend. But again, it looked like it reached a point where it turned like that. So this is your monthly swing low, this is another monthly swing low. And now when the region reached this area from this point here last year, when was this last year? It was last year, April last year, we had price turn back and push upwards. So basically, just in summary, that's what the monthly is telling me. The dollar had been increasing in strength for over the past couple of years, up until when last year we see now like the Australian dollar is surging up in strength. Technically, that's what I do. So after doing that, I would now notice the important swings and imbalances that I see. Starting from the monthly could be a stretch, but for me, it helps me because I understand how higher time frame parameters have more value than lower time frame parameters. So I'll just mark out, in this case, I'll mark out this fair value gap over here. Okay, let me just do that quickly. Good. As I told you, a fair value gap is 3 candles. This one is your first candle. This one is the imbalance that was created in the month of January, so second candle. And this here is your third candle. I'll explain in a future video how do I actually use fair value gaps and when do I actually use them and in what time frame, etc. But for now, let me just build a story for you. And probably with this story, you can get a few things to use in your strategy. So what other parameters that I see? But remember, this is the monthly, so it would take, each candle here presents a month, so it would take a long time for this parameter to be used. So I just mark this one here. So I'll go to the weekly as well. I see the same. This is the monthly fair value gap in question. You have this is a swing high. Yep. So a weekly swing high. So each candle here presents a week. So I'm guessing this swing high here would be used in one manner or the other. Yep, like that. So I mark it. I also have to mark this swing low, even though distant, but I just mark it so that I can know what is between one swing low and another swing high. So we have a fair value gap. We have also this swing low right here. So I'll call this an intermediate swing low. Sorry, my lines are not straight, but it's fine. There you go. One swing low, two swing low, fair value gap, and that. And then now you have current, this is current price action, of course. So I'm saying maybe definitely price will pull up to this gap, or maybe here or here. So I just want to know where they are in relation to the chart. And mind you, I'm not looking as far back as, I'm not saying, oh, let me mark this swing low, because it's already used. As you can see, price swept, or it crossed and then came back and then it went lower. So it's already used. So to me, this is not significant. I'll only mark the ones that are closer to price action and are not used. Yep, like that. That's why you don't see me marking this swing high right here, because it's already used like that. Use, I'll explain them in a future video. So right now, let me just show. Yeah, good. Then I go to the daily. The daily will tell me current and more current price action. So you see this here is a swing low, and there, and we have this fair value gap, or a series of fair value gaps here. This is the monthly one. Then we have the daily fair value gap right here. We have the swing low right here. Simply like that. This is the weekly swing low that we marked. So this is the daily one right here with a couple of fair value gaps. So I just want to see, just to see. Somebody would ask, why are you marking as low as, a couple months back? Price these days is crazy, trust me. You would get a sweep, you get a swing of, or a surge of volatility all the way low, and you'd be surprised. It would just be in one candle. Of course, not AUD USD. I'm talking about commodities like gold and silver, etc. And then, now that we've seen this, I would now think of the following. Think, since I know price moves from one point to another, I would definitely, I'm stuck. Yeah, so from just this chart of AUD USD up until the daily, now I know where is price going. Price is in the middle. We talked about price being in the middle of two parameters, it being not ideal to trade. So now I know that price would have the following pathways, assumably. So I would say, since price is at the middle, I'm trying to look for the arrow tool. No, not this one. Since price is here, I would expect price to go all the way low. Let me just do this. Yeah. Price would go all the way from this point to here in a manner of sell. And remember, if this is the daily, if I'd go low time frames, I'd get entries and etc. But I'm not looking for entries. I'm just looking for the possible point where price would go to. Talked about in the rules that price moves from one parameter to another. We've also said once a parameter is used, it is invalidated. So this is not used, this is not used, this is not used, and this is not used. This is a weekly swing high. So now price has two directions to move to. And in these two directions to move to, I would look to profit from either movement. You understand? It could go up like that, it could go down. And this keeps me at a position to understand, oh, okay, what do I do? I would keep alerts. This red line here is an alert. I'd keep alerts right here, so that if price reaches at this point in time, we would know what to do, like that. So it's just a short example. It would be, and I understand it might be an insufficient example. Let me just pull up something that I did previously. Trade history. Oh, there's too much trade history. Okay, so this is gold, yeah, and this is a strategy. This is as live as it is. So I marked my swing points. I marked my fair value gap. So this one was a high time frame fair value gap. It was a weekly, yeah. So I go up to the weekly. Go to the weekly and I show you. So you have three candles, 1, 2, 3, and there's a space between. And so from this space, I would understand, so if price gets in and leaves above this price, then we see what follows would be, bullishness from the charts, like that. So, of course, I'll explain more of this trade in the next video, but I just want to show you how I would use the parameters, for example, because I know price moves from one parameter to another. So price moved from this swing high here into this fair value gap, and now it's moving from this fair value gap towards the swing high, even though we have this week as a bit weird because of the war and everything. Okay, what do we have to consider? This is like winding up the video. So once you mark up your narratives, once you mark up your story, once you have your parameters marked, you have to consider the following. You have to consider things like volatility, strength of currencies, and etc. Currencies like the dollar, the Canadian, they have sort of relative strength. And they're also dependent with the zones and the sessions. So you cannot use them in certain times and you cannot use them in other times. You get also news events, whether expected or not expected. We have websites and applications that actually post these news events like before they happen, so you kind of have an anticipation towards when you will get strength of certain indicators based on the news events that are tied to them. Crowd sentiment, this is very important. Basically, it's been a pattern that market actually goes opposite with what the crowd thinks. It is not certain, but for most forex pairs and slightly commodities, this would work. As in to say, if the crowd buys, the market sells. If the crowd sells, the market buys. But I'll give a clear indication of how I use this later on. And then you have sessions, like major session times, as I explained, from volatility. If you realize this drops down with like in level of importance, like this will be the most important, then news, then crowd sentiment, and then sessions. And then you have risk management being like of separate but high importance, because you have to know how distant are you between your parameters, between your narratives specifically, because since price moves from one narrative to another, you can calculate how much you're willing to lose based on how far the parameters are, and etc. Yeah, so technically that is how I plan trades. I plan trades by first identifying my parameters. In the next video, I'll introduce how I place trades, so execution, by after identifying bias, after identifying chart narrative, after indicating the possible news of the day, and now go to the lower time frame. As you have seen, I have not gone to the lower time frame in this video. That will be shown in the next. Thank you for your time, and yeah, structure first, narrative, and then both of this yeah, bring about execution. Definitely the next video. Thank you so much for giving me your time and your ear. So whatever you're watching this from, don't forget to like and subscribe, and see you in the next video. Also, if you have any questions, please drop down the comment section, comment, and if you survived till this moment in time, just comment, I'm here, and I'll actually give a like to your comment. Thank you so much, and see you on the next one. Peace.